Okay. Well, let's invite Siddarth Bhamre of Angel Broking also into the conversation. Morning, Siddarth. The Nifty strategy now?
Lata, I'm not very pessimist on the market. We have, been saying that one should not short beyond 7,500, and since then market has corrected, more than 150 points. But still, we haven't initiated short positions because we were not seeing index-based selling by FIs. Now, yesterday in cash market segment, this is 6-day in January series where they have sold more than 1,000 crores, which is negative. But look at what they have done in index futures in last two trading sessions, and especially yesterday. 958 crores of long positions formed with rise in open interest. Look at what is happening to implied volatility after August-September fall. Implied volatility has gone up to 19.5. That means it's on the higher side. Look at some of the names like ICICI Bank and SBI. If chartists would understand more, that fall has been significant and very high volumes. Now this kind of volume generally happen when either a stock take a pause or it is trying to make a bottom. I'm not saying there would be a significant reversal from current levels, but I'm not expecting significant downside in January series in Nifty from current levels. So I would suggest stay light in this market, cover your short positions.
Okay, stay light in the market and cover your short positions. We'll come back for some of the stock ideas that you've identified for us, Siddarth. But before that, Prakash, there's a very interesting stock that you have picked up for us with a long-term horizon in mind, Satin Credit Care. I haven't heard of this one, so just take us through the story there.
That's right, Sonia. Given the kind of mayhem that we see in mid-caps, the first rider is that people need to understand the stock and maybe buy it at decent levels, lower levels if they think it's available, but only with a long-term orientation, not necessarily on day one. Satin is basically the largest MFI in the northern Indian market and probably the 5th or 6th largest on a countrywide basis. It got listed in 96, but only on regional exchanges. It's just last year, October, that they got listed on the NSE and the BSE. So you don't really have a history in terms of what people would know about. But financially, the company's got a stellar history. I mean, the operational history is very rich. It has a presence now across 13 states. And when you look at the states, these are all under-serviced states of the north and the northeast. You're not talking about the rich AP, Karnataka, a belt which has MFI as a very established business culture. This is in UP, Uttarakhand, JNK, Haryana, where nobody's heard of, and they focus only on shopkeepers, primarily women shopkeepers. Women who handle tea stalls, tailoring stores, shops and things like that. And they've been very successful. In fact, they were the pioneers to do this collection of loans on a daily basis. Way back 15 years back, HP Singh, who's the promoter, actually pioneered this. He's an NBFC stalwart of sorts. And the company's got 5 rounds of funding from PE funds. And still the promoter stake is one of the highest in the MFI business at 36%, which is very encouraging. The best part what I liked about this company's profile is they've become business correspondents for 2 banks. One is, I think, Ratnakar, the other is Yes Bank, and also for Reliance Capital. They've also started doing loan against property in the same segment. So the revenue streams are much more than what other MFIs have. And it's diversified, so it's not dependent on that. And after the AP crisis, this is the first company to have got funding. They also offered a profitable exit to the first PE investor. So that track record is already established. CARE has given them an MF1 grading and a BBB plus rating on the paper. The important thing is after Mudra was set up, Mudra Bank, which came through for the MFI business, they were the first to have received credit. So it does tell a lot about the quality of business and the book that they have. It's absolutely, if you go into micro parameters of this business, it's very encouraging to see the kind of metrics that they have achieved. They've already done about close to 240 crores of revenue this 6 months. And I would believe, given the kind of management commentary, they would expect to close at about 450 crores. They've been growing at 50% CAGR for the last 4 years on revenue itself. So with an EPS of 18 in FY16 and maybe 27 next year, it's available at just a 20p. 20p would be my target, but look at SKS, which is the other listed player, and it's such a lot of rich valuation that you're ready to pay. It's just that I think this stock hasn't got discovered, so go ahead with it. But the current PE on a trailing basis would be about less than 20. Okay. So it's not rich even right now. And even if I maintain the same PE, it kind of, adds up to about 550 next year. But you'll have to be patient with this business, and luckily it's China insulated, it's yuan insulated, whatever you want to call it. So it's decent enough as a pocket also.
All right. Actually, thanks a lot for that, Prakash, to give us a stock that would be insulated from these vagaries. We haven't gone through Siddarth's ICICI strategy. Siddarth?
Yeah, Lata. So 53 IV for ICICI is way higher than what we have seen IVs in August, September, fall, which clearly suggests that it's overdone. So we are suggesting, I'm not expecting ICICI to go significantly below 215, 210 mark. So I'm taking that risk of selling 220 put option around 6 rupees and probably 240 option around 240 call option around 2 rupees. So combined premium of 8 rupees, and I'm expecting ICICI Bank to remain in this range. So capitalize on the premium because IVs are quite high.
Yeah.
All right, Siddarth, thanks for that. We still have, okay, we have only 13 seconds, so let's just wait it out for the actual opening. The pre-opening is indicating about a 0.5% uptick on the Nifty, not quite making it to 7,400, but 7,385 is where it might. That's been a long time support level. It was expected to be a resistance, but I think the first tick itself was 7388, 89, 87 as I speak. So 0.5%, and it's HCL Tech that stands out. We should pull Asian Paints as well. Those are the two stocks that should be leading the market higher. Asian Paints 1.9 up. Giving it companies, HCL Tech, which is 1.8 up, Reliance as well, up about 1.5, 1.6, and as Prakash was brightly pointing out, in this one case, it won't be a sell on news, but probably buy on news as well. So expectations building up on Reliance as well. NTPC now has upstaged to the top of the table, 1.8 higher, so still playing defense of the market. Tata Steel, okay, short covering coming in, 1.7. Tata Steel, Axis 1.7 up, Bank of Baroda 1.7 up. So short covering coming in rather rapidly. Adani Ports also joined that list. I should have mentioned 1.7 higher. Hindalco. So all the metals are now rushing in for some bit of profit take, some bit of short covering, which is also of course profit taking. As well, you're seeing it in the bank stocks. Axis Bank 1.6 up, Bank of Baroda 1.4 up, ICICI 1.25 up, PNB as well 1.3, SBI 1% up. Asian Paints now sliding to just 1% higher, but still among the green stocks. Reliance top of the table now 1.7 up, Hero Motor 1% up, Infosys, Yes Bank, Kotak, Wipro, all of them up about 0.8, Lupin as well. And then come the half percenters, Bharti, Bosch, Idea, Sun Pharma, ACC, all of them up about 0.5%. What's in the red? Coal India is in the red, Maruti is in the red, 1% down. Kane and ONGC obviously are in the red, they ought to be. Z Entertainment was Rajat Cell, that's up, down 0.5%. Cipla, Prakash Cell, down 0.5%. TCS also is down about quarter, HUL down about 0.1 thereabouts. So actually it's minor selling numbers. BHEL actually is now taking a bit of a selling, that's down 1%. But all told, it's the Bank Nifty that's charged up 0.7 higher. It's led by just about everybody. Axis, ICICI, SBI, HDFC Bank is not the tallest winner, but then it was not the loser as well. So mid caps.
Oh yes, it's a good opening for the mid-caps, and it's good to say that after many days. So there seems to be some signs of stability returning, but one must not speak too soon because you never know which way the tide turns. For now, the advance decline ratio is good. So 700 stocks on the advancing side. Let's talk about some of the result reactions. You have Rallis, where you saw a very weak set of numbers. The profits were down 20%. So Rallis is under quite a bit of pressure, down 4% today. Bharat Bijli, that's a 400 crore market cap company in the electrical engineering space. We don't generally talk about it, but good company, and the stock is up 7%. The numbers were good this time. It's turned around. It's made a profit of about 9 crores versus a loss of 4.1 crores earlier. So Bharat Bijli is something to look at. Delta Corp, good numbers, profits of 7.7 crores versus a loss of 0.42 crores. So Delta Corp is up about 3.5% or so. On Mobile Global is up about 3.5% as the company has been awarded a renewal deal of ring-back tones for 3 years with an option of a further extension for 1 year with BSNL. So Onmobile Global is up almost about 3.7%. PPAP of Defense is up almost about 4.5 to 5% and just take a look at Mindtree. Dollar revenue growth decent, 2.2% quarter on quarter. They acquired a company called Magnet 360 for $50 million as well. So Mindtree is holding up in the green at this point in time. So not a bad opening. On the downside, you have a couple of stocks like JSW Energy and Motherson Sumi that have come in for a tad bit of profit taking. Let's take a look at Tata Metallics as well. Because of their income has fallen to 293 crores versus 321 crores, but the profits have gone up to 28 crores versus 19.3 crores. So Tata Metallics is up about 4.5 to 5% HOEC is another stock that's up almost about 8% right now. So big moves coming in on HOEC this morning. But Prakash, I want to come to you on Bharat Bijli. That's a stock you track, right? It's up 7%.
Yes. In fact, it's wonderful to see something from the core engineering sector to turn around. With whenever you talk about green shoots, these are some of those indicators that things are looking up. And remember, Bharat Bijli is a very well diversified business model. They have transformers, electric motors, a lot on automation and elevators, which very few people know. They have been competing with the likes of Mitsubishi and Otis so significantly in high capacity elevators. It's such a high margin business, and the best part is you also have maintenance contracts which run into years. So Bharat Bijli, if they get their act together in some of these other verticals, is going to be a stock worth watching. The book value is already at some 465 or something. Stock is at 700. So there's enough salience. They struggled because of the kind of capacities that they had built originally. They started making transformers, I remember, in 1950s, and they took help from Siemens to upgrade. Their capacity is very outdated. Now they've kind of transformed themselves, and that's where you see the turnaround. So this is going to be a great stock to watch out for. Maybe today it's a little bit of a euphoric move, but once it kind of settles down, people should look at it from a longer term perspective. Maybe we'll discuss it in one of our mid-cap picks someday.
All right. Okay, so watch out for Bharat Bijli. It also fell rather precipitously about a week ago or 2 weeks ago, and now it's seeing a bit of profiting. But Anuj, I wanted your take. Yeah. 0.5% higher, and that 7380 for the moment, for the first 5 minutes, is being maintained. Bank Nifty as well, up about 0.7.
So my sense is with the way the market has behaved, a lot of people who took long positions yesterday, smart money took a lot of long positions yesterday in Nifty futures. They may want to unwind. What could happen today is you will at some point very easily see a red in the mid cap and small cap index.
Already actually lost about 0.5 percentage point.
Yes. So by 10 a.m. you should see red in both the indices. My sense is that the Nifty should hold and the Sensex should hold as well. But the first round of indication of whether it's going to be a bad day would come from the mid caps and small caps. If they turn into the red, my sense is they will. And at some point, even I won't be surprised even if the Nifty has to turn into the red, though it could be the kind of a day where you have maybe a second round of recovery, which is more sustainable than the first recovery. First recoveries normally on days like this are sold because of the way people are stuck with their positions. So that's something to watch out for. I'll be watching out for market till 10 a.m. My sense is you will see red in the mid cap index very soon, red on the small cap index very soon, and you'll see this advance decline ratio turning very soon from 2:1 maybe to 1:2. It should be a matter of time.
Oh yes, look at
if your sentence was a bit longer, the mid cap would have already gone into the red. I thought it's up just 0.1 at this point in time, Anuj. So yeah, I mean, as you said, it is just about a rapid decline. But I just wanted to ask Rajat, if that is exactly the way the market will play out and we may see a bit of red, what is the advice to the investor? I mean, advice to the trader? Prakash.
Me? You're asking me? I thought you were asking me.
Advice? Oh, sorry. Okay, go ahead, Rajat. I probably said Rajat. Go ahead, Rajat.
Advice to the trader would be that you can continue with your short positions, but as we have been discussing, that the position size should be pretty small. I mean, it should be relatively smaller position size, except for stocks like Larsen, where the trending down is still on and it is going further down. And slightly worrying for me is the performance of Asian Paints. I was expecting much more enthusiasm about Asian Paints. Now that it is not showing, this could actually lead to what Anuj is saying, that at 10 o'clock we might see a lot of red on the screen.
Well, actually, it's red for the mid caps right now. as Anuj and Sonia have been saying. It's not quite yet a bad ratio though. It's still 2:1. But Prakash, what is the strategy on the Nifty?
I would say that so far 7450 is a very strong resistance zone to work with. Unless we get a breakout from there, we don't buy it. But stay out now. If you get a breakout, go out and buy it. Then it becomes a better trade for a couple of days, because we could see a bottoming out place this week, because next week is F&O expiry and 1 day off.
Okay, well, just watch out for HCL Tech. That one has slipped into the red now. So it started off with a gain of about 2.5% or so. The stock is now down almost about 2% odd. Prakash, what do you do at a time like this? Do you think it's just profit taking, or is there something in the numbers that has disappointed the street?
No, I don't think it's the numbers, Sonia. It's more of, an early timely exit that everybody wants at a level which is decent enough, because everybody is very keen on lightening their position. And as Anuj said, this happens when the market shows the first signs of a recovery. Today is after I don't know how many days that you've seen it open in the green in a unexpected way. So people will kind of sell into this and get out of most positions. But especially in result season, it happens. All these counters have large positions built in anticipation of numbers and all. But eventually, I think the Nifty should see some recovery, and that's when people will start buying back into the post-result kind of scenario. To me, Wipro is still a better bet than HCL Tech, though HCL Tech is not very expensive on valuation, as you pointed out earlier. But I would believe the law of averages will catch up with it in terms of growth rates going forward. So my assumption is, whereas Wipro, it helps in a different way. It's a positive growth that Wipro could clock. HCL could start fatiguing out of that.
No, but why Asian Paints should be a sell? It's 1.8 down. And what is it, 30 times even now?
No, I think that's exactly, it's all, people wanting to get out. Good numbers give you an opportunity to move out. So that's why this is such an early exit. It's not like it's happened after an hour that people have digested numbers and built long positions and somebody's selling.
But that's a scary trend, right? That every little bounce is also getting sold into, even in quality.
Yeah, that's a scary trend. And why should that scare you? For example, look at what happened to Reliance yesterday after really strong outperformance that we have seen. And for all you know, Reliance may have actually peaked out, because, of course, standard disclaimer applies. It owns the channels that you're watching. But again, a company where you expect record numbers, but the market had maybe priced that in, and you're using good news to actually exit stocks.